So you get all the benefits of self-custody, control, and access to DeFi without any of the crypto nonsense. It's like truly a consumer product.
Like, how do they cross the chasm and go from La La Land into this real pragmatic business world?
Which provides more value, do you think, to the business, or like, have you seen a differentiated, revenues, etc.? Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Welcome to the city. It's way cooler today. I'm telling you, you picked the right day.
Yeah, right. It's good to hear.
Yeah, man. So obviously, you put me on the EtherFi card several months back, or I think maybe 2 months back.
Maybe because that's when we launched. Yeah,
we had that podcast with Arthur. Maelstrom's on the corporate card. There is, if you look at the Dune charts that you've been posting, is absolutely going up in terms of money spent. What are the numbers now? What's the growth been so far? How are you feeling about it?
Yeah, so we have about 20,000 users that have signed up, which is pretty solid growth numbers over the last 2 months. We have we're up to around 250 to 300K a day in transaction volume, which is solid 2 months out. We were told by our card issuance partner that we're the fastest program they've seen to $1 million in spend.
There you go.
Which we hit within like a week, which was great. TVL, so the actual deposits in people's wallets, non-custodial wallets, which they use to spend, is now around 50 million. These are pretty serious numbers. Like, to put it into perspective, the largest card program, these are estimates because these aren't public numbers, but the largest crypto card program in the world does $5 to $10 million a day in transaction volume. So that's like the ceiling.
And who's that?
It's crypto.com. Again, these aren't public numbers. We don't know.
Tear up your crypto.com card yet?
They sponsored the UFC. That's how they got it.
Well, yeah, they make money on lots of different things. I think we'll get to a couple million in transaction volume within a few months, daily transaction volume, which would make us certainly one of the largest programs. But what's most exciting to me about it is not, there's 1 million cards, right? That's not particularly unique. What's interesting is it's a non-custodial card. It's plugged into DeFi. It's the only card that actually lets you like borrow or spend your DeFi strategies. So I would call it like the only crypto native card out there. And it's a fully integrated product. Like, if you download the app on iOS, you try it out, it feels like a fintech product. There's none of the crypto bullshit that most people are used to with seed phrases and signing random hex transactions. So you get all the benefits of self-custody, control, and access to DeFi without any of the crypto nonsense. It's like truly a consumer product.
Introducing Asset Runes, the future of decentralized finance. Stablecoins natively on Bitcoin. Hedge against volatility. Diversify your portfolio. All directly from your Bitcoin wallet. Secured by ZK technology. This is Asset Runes. Available now, exclusively on Starknet.
I think it's important to disclose Andy and I funded Angel into EtherFi. And I'm glad we did, because you guys, like you said, there's none of the crypto bullshit. You guys treat this like a real fintech business. And I think oftentimes we get in this kumbaya la la land about, build a community, launch a token, you're going to end up finding product market fit 1,000 years down the road. Well, you guys are taking a much more pragmatic approach. You're targeting distribution. You've already found product market fit for one product, and now you're targeting a new segment. And so I guess if you have advice to some of the companies that are out there that may still be in La La Land, like, how do they cross the chasm and go from La La Land into this real pragmatic business world?
Well, this is, it's a tricky question, because one of the reasons that crypto, I think, has an absence of product market fit and, real consumer app adoption is because the path of least resistance for making money or for getting money is some infra vaporware, narrative driven bullshit launch a token, cash out, call it a day, and maybe do that over and over again. And that, I mean, that's the path of least resistance. And so that's where capital tends to go. Like, let's do the 500th freaking, L2 and L3 and whatever. So like, how do you fight against that? I don't know. Cause it's, that it's hard.
Yeah.
I think ultimately, I think it will change. The gambly aspect of it is naturally always going to be there. But I think over time, as the market grows, like the market for casinos and gambling is large, but the market for real shit is 1,000 times larger.
Right. Yeah.
So eventually it does become, a bit of a rounding error. It'll still be there. But the way this changes is builders that actually have a long-term focus, that spend time to actually do, figure out real problems, do customer analysis and find that product market fit. And that's just hard work. That takes time. You're not going to make a quick, it's harder to make a quick buck that way. So anyway, so that's the advice, I guess. But like, I don't know, to somebody who's, 22 years old, launching a shitcoin, am I going to tell them like, no, or this disaster, don't do it? I'm like, look, you definitely have a chance of making some money doing that way, but I don't know.
Yeah.
I'm not interested in that.
I think you make a good point. It's like, you want to make some money very, very quickly, or do you want to make sustainable wealth? And I think this is, from an entrepreneurial perspective, the difference in sort of going into the gambling route and launching the next infrastructure vaporware versus launching a sustainable business model and a pragmatic business.
Yeah, like, look, my goal, I'm not interested in making, I've had enough success in my life. I don't care about making, a little bit more money. What I care about is building something that is actually transformational, something that impacts millions of people. Like, what gives me excitement is to hear people from all kinds of random countries in the world saying, I use the product, it's great. It actually helped me solve a problem. And I want to build an entity, a project that's worth tens of billions of dollars. Like, that's the scale that gets me excited. Sort of a quick hit just doesn't do much.
Yeah, so you've been teasing about some new applications on top of EtherFi's like neobank, DeFi bank kind of foundation, right? So we have the cash card. What else are you looking at trying to build on top, or are other people coming in to build apps on this foundation? What is that kind of shaping up to do?
I did briefly kind of tease that. Well, so there's a roadmap. As the product stands today, a normal person still, I think, would have a hard time using it. Because if you think about what's required to use like the EtherFi, we call it a DeFi bank, you got to buy some, go on Coinbase, maybe buy some USDC, send it from your Coinbase account to a specific wallet, and then you see it in EtherFi, and then maybe you put it into Liquid, and you get.
When you say a normal person, you mean like a normal person, node pointer, right? Someone who hasn't maybe
Even a CeFi user. Let's say someone who's keen on crypto but a CeFi user. It's still too many steps. What it needs to be, if you look at products like Wise or Revolut or Chime or whatever, they're super polished. Like, they have a level of polish that you expect from like consumer apps these days. You open the app, in 2 minutes you can have money in there and you could be spending it. That's what we need to get to. We have about a couple months of roadmap to get there. That includes like all the payments apps integration, Plaid integration, Pix integration, and whatever. Ways of getting money in and getting money out. Ability to support lots of different assets, token swaps, perps, believe it or not. All this stuff just integrate into the app so that it's, really nice and easy to use. That's like the very next roadmap. One of the other things that I think would be really cool that for sure we'll do it at some point. It's just a question of when. Is I really think there is an opportunity to create. I don't know how big this gets, but like whether it's apps or widgets or something that you can actually plug into this financial infrastructure and allow people to build like tools around this. Like, maybe you want a robo-advisor that automatically allocates, some sort of index of assets for you, non-custodial, automated way. Maybe you want something that automatically like saves, every time you buy something, it rounds it up to the nearest dollar and like uses that to buy Bitcoin. And that's just like a savings mechanism. Like some sort of charitable stuff. Like, you can come up with all kinds of different interesting ideas of like hooking into stuff. And I think that that could be really compelling because it almost gives you an ability to create your own programmable fintech
Yeah.
experience.
Yeah. So in that regard, then with these new features, kind of thinking about applications that you can build on top of this DeFi bank, when you're looking to kind of go from the current state of revenue as to where you guys are now, and trying to kind of project out to your goals, what do you think is going to be the driver of the larger revenue for EtherFi? And how do you make the decision as a entrepreneur, as a builder in a very competitive space, to like subsidize early adoption versus start to actually, turn on the fee switch, try to really generate value from your customers?
Well, so we're profitable every month. We generate revenue, and we use that portion of that to buy back the token. So there's like a direct tie-in between token and protocol. So having built a SaaS business before, it was much more in a much more difficult industry. Let's say it was higher education. So, but I'm very cognizant about unit economics,
Yeah.
so that you don't spend more money to acquire a customer than they're worth to you. So far, I think we've done a really good job of staying disciplined. Take these numbers with some caveat, but our average customer is worth about $1,000 a year to us. Our ARPU is about $1,000 a year, and our cost of acquisition, depending on the channel, is about $50 to $100. So that means our payback period is, let's call it, about a month, which is great. Like, that's fantastic. Once a few of those features that I mentioned are flushed out, we have a budget set aside, and marketing budget, to start really like pushing user acquisition. We have a $4 million set aside this year.
Yep.
And our goal is to get to about 100,000 active card users specifically. In total, we have a couple 100,000 users.
Yeah.
But we want to get to 100,000 users that use the full integrated product, including like staking, the liquid vaults, the cash product, the borrowing, and everything else. And the revenue opportunity, beyond that, then we look at margin expansion, meaning driving more revenue by offering the user more products like token swaps, perps, borrows, more assets that they can use. Currently, we generate about 100 basis points on transaction volume on the interchange fee on the card.
Yep.
Generated about 50 bips on the borrow spread. We've got about 30 to 40 bips on the staking, about 200 bips on liquid, et cetera, et cetera, et cetera. So there's this like stack of growing services that we can provide that are still the cheapest that the user can get in the market. But by creating this vertically integrated stack, it creates this like very powerful positive feedback loop, because then that lets us spend more money and offer more perks, more cashback, more rewards, or whatever to our customers. We have the travel booking stuff. I didn't even mention that, but that's we have 7% margin on that, which is like
what is that? Travel, like you can book travel directly through EtherFi?
So it's like similar to like Amex.
Sure.
Yeah. Chase, you go to this portal, you get 5% cash back on all your travel bookings, and the hotel prices are super cheap. They're usually 10 to 30% cheaper than you can get elsewhere. And so that's a great, especially with Cannes and Argentina coming up.
I had a question about another feature that you mentioned, which was Plaid, but also some just broader onboarding integrations that you had mentioned. And I'm curious how much some of the deregulation or regulation just positively has affected that. Is this something that you've seen or tried to do in the past and it really wasn't feasible? And now, Plaid and some of these like traditional banking partners are becoming a little bit more accepting of crypto, and it's easier to integrate those things?
For sure.
Okay.
I think that's exactly right. It's not that it was, we spend so much money on lawyers. We make sure every jurisdiction we operate in, every product we issue, like it's literally to the point, like every state, you can use these two products, but not this one. And you can get the card here, but not there. Like Arizona is not supported for some reason. So every jurisdiction, every country, we're obsessive about this crap. So it's not that this stuff was not allowed before, but it's actually exactly as you say. Now that the vibe has shifted to where like, oh, this crypto thing, there's the Genius Bill, there's like, like this stuff is actually like more reputable. all of these services that in theory should have been fine before are now just much more willing to work with you. We did, for example, like MailChimp just like kicked us out recently.
That's happened to us.
They're no crypto. I'm like, seriously? So so it still happens, but it's getting a lot better.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now maximize yield on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
So are you guys pretty much, let's just say, finished with like the whole kind of like restaking kind of part of your business, or like how does that's still very much active?
Yeah, generates a huge amount of revenue.
ETH is out there still, right?
Yeah, it's $6 or $7 billion in deposits.
But how do you think about like the focus between those two going forward?
I mean, this is the cool thing about being a vertically integrated platform.
Yeah.
The people that use the staking product were the first people to adopt Liquid and adopt.
Everything was on their own site.
Yeah, the people that are coming in, from Taiwan or whatever, to use the cash product, deposit into Liquid and then stake. So we view it as very, as I said, it's a positive feedback loop. This is, it's a playbook that's been around for like centuries. Like vertical integration is not something.
No, I mean, look, I can see a future where that site, just like the EtherFi dashboard has, travel, it has trading, it has like a perps thing, maybe it has
it's a fintech.
It has an AI agent like LLM dashboard where you can like operate your portfolio, like
for sure.
And if it's all in one kind of interface, one place, makes it much easier to operate. From
the exact same way that like you open up if you use Revolut or whatever neobank you use. It's not like, oh, here's your checking account, or here's your stocks. Like, no, like you can keep your cash here. You can buy some stocks. You have a credit card. Like all this stuff is in one place because that's what people want. And so that's what a consumer product is. You like do the thing that people actually, want.
So projecting like kind of skating to where the puck is going with you guys, I take it, correct me if I'm wrong here, from a competitive landscape, it's not the other crypto companies that may be around permissionless that you guys are thinking about. That are going after Robinhood.
Correct.
Right? You're going after like that sort of echelon of fintech companies that are out there.
The broader space that we're going after is neobanking.
Okay. Right.
We are not a bank in that we do not take deposits, but we are, I think, building and have already built a viable alternative to a bank. So that's the larger category. That market is about $150 billion. All of DeFi, all of it put together generates, I don't know, $1 to $2 billion a year. It doesn't fucking matter. Like the pump fund and the even Hyperliquid, like this is a rounding error. Like it's a rounding error on real shit, right? So that's the market. And the market is growing really fast. The neobanking space is growing 30 to 40% a year. This is going to be a $1 trillion market pretty soon. And eventually it replaces the traditional banks. So that's what we're going after. That matters way more than trying to take market share from some random shit card program that's got 12 users.
Well, because you did kind of remind me of one thing, which is that the traditional banking sector does seem like it's sort of like cautious and looking at what's happening and could potentially get innovated because
for sure
they're not nimble.
They're not going to roll over and die.
Right. And I was thinking about this in the context of stable coins because now you have these large social media platforms that are thinking about launching stable coins. Meta, even X is starting to seem like it's potentially getting into that game. And so now these companies with distribution are starting to become banks. Even Apple, right? It has Apple Wallet, Apple Cash, right? Card. So as you see the evolution of banking and traditional banking sort of being left in the dust a little bit, how do you see this playing out from the social media side, the DeFi side? what do you think the evolution, on a pick your time horizon, what do you think that evolution looks like?
It's so hard to predict. I think the only there's no information, but like the only thing you could say is it's going to be very different 5 years from now, 10 years from now than it is today.
Yeah.
I think the correct way to operate in this space is to focus on building a product that lots of people want to use and not worry too much about what, Apple and Google and Meta are doing, or even like Chase or other, large banks. The reason is because when you are in a growing market, a market that's growing by tens of billions of dollars a year, new revenue per year, like what you need to do is just capture a meaningful share of that. And where the boundary lines, get defined, I mean, it matters in the grand scheme of things, but when you're starting with, from zero, how do we go to $1 billion in revenue, to 10 billion in revenue? Like wherever those lines, those boundaries end up being defined, as I said, it matters, but like, again, what matters much more is just this like maniacal focus on customers and creating a product that people actually want. And then you'll define your niche, over time. Yeah.
I'm curious how much you prioritize like the corporate card and the corporate market with regards to like the wealthy crypto user market, right? Like which provides more value, do you think, to the business, or like have you seen a differentiated revenues, etc.?
Yeah, so they're in crypto. I think there's a very powerful virtuous cycle feedback loop that occurs. We saw this actually with our staking product, the first product that we launched. When we were raising our seed and Series A, like every pitch, people would ask us, okay, where are you focusing on, retail, or are you focusing on institutional? And my answer to that was, look, in this space, I think you have to do both. The reason is because if you get retail users, that means when you go to pitch the large institutional investor, all of their analysts, all the like 25-year-old analysts who work there are already using your product.
Yeah.
And so that cuts your sales cycle from, 6 months down to like 1 month, because they're already familiar with you. They're going to be pitching you internally, and vice versa. Once the institutions adopt, that creates, good brand awareness, security, and that helps you get adoption on the person-owned retail side. Because and obviously your TVL goes up, and that creates a positive feedback loop. So we had to service both, and we have a B2B motion, I guess, to acquire business customers and the retail stuff. And the exact same playbook I think applies in this case for our corporate card product, which is evolving into more than just a card product, but including things like expense management, categorization, and treasury management and tracking, all that stuff. But then every single employee who gets a card automatically also gets a personal EtherFi account.
Yeah.
And with one click, now they can create their personal card. And collect cashback and rewards and points and all that stuff. In a market, like in a sense, we're building, like, at least for now, a vertical focused business, the vertical being, crypto and DeFi. And so this like layers on a cake model is the way that you build like a moat. Is if someone's using you for one product,
right,
they can churn. If someone's using you for three or four different things, your churn basically goes to zero. In fact, you get negative churn. You get like positive dollar retention.
One last thing for you on the token side of things. How much has the hyperliquid model, do you think, with regards to the new administration that we're speaking about, kind of newer abilities and flexibility, then hyperliquid comes to the market, kind of does its thing. How much of these two things have influenced your thought process on EtherFi token, and kind of how do you think about creating value for token holders?
I know. So we had value accrual and token buybacks from almost day one. So like I felt very strongly about that because I didn't want to just have a meme coin with the name of the protocol, right? Which is what most tokens are.
Yeah. No utility, right?
So hyperliquid also chose that. Obviously, they're doing it in much bigger size because they're the casino dollars.
EtherFi perps. ASAP.
Well, we are going to be integrating with hyperliquid, so you will be able to,
like on the front, like you'll be able to trade on that liquidity on the EtherFi front end.
that's work in progress.
Will you be able to get like fees from that, or yeah?
Hyperliquid has a built-in.
That's the builder codes thing, or
Yeah,
yeah,
exactly.
yeah. So you can just tap into their front end or tap into their liquidity with any.
You'll be able to say, okay, take this chunk that's now collateral. Let me do some perps.
Yeah.
And then we'll be able to pass on fee savings because we get economies of scale with Hyperliquid to the users. So, anyway, so value crowd token from day one, that's been something that we cared about. It's really great to see like a lot of the best projects now starting to do that. You know, Hyperliquid probably they're the most aggressive about it, and we've seen their token absolutely crush it as a result. Aave's been doing that. There's others. So I think that's fantastic. I really think that's going to be a permanent meta where if you're not doing that, you're going to be kind of like looked at kind of like what the fuck are you doing?
Yeah, like why are you
Separates the men from the boys because
Right.
yeah,
it is a lot. Yeah, it's a lot in the sand.
like show me the money market, right? If you're not doing the buybacks, means well maybe you don't.
But it's a tough question, right, for builders because so many of these markets are so cutthroat in terms of competition of adoption.
Right.
So you've got like a market like interoperability, right? For example, like bridging. Like if anyone's gonna start charging more, you just have people that raise the war chest and be like, no, you know what, screw you, we're just gonna go free, and just we want the adoption. We want
that's how the real world works. There's certain industries like that are super low margin and they're big industries, but they're shitty industries to build in. They're undifferentiated, and like that's reality. That's good for people.
Yeah. Which is like coming to light in a big way as the last like 6-ish months here.
Yeah, like I think generally in crypto, maybe this is too strong a statement, but like broad horizontal platforms are harder to monetize because just eventually you do get crushed to zero because it's just like there's a million of them and it's just you get perfect competition essentially.
Yeah, and that's the fork of a fork. Like that's what separates the infrastructure vaporware, as you called it, from the verticalized businesses with differentiation.
All right, Mike,
thanks so much.
Last thing for you. What are you bullish on in particular, and what are you bearish on or fearful about?
I mean, I'm bullish on ETH, maybe almost like unreasonably so, because I look around and I think to myself, like, I don't know what other ecosystem you'd build on if you're doing something serious, right? And I think institutions probably have the same, from what we see, have the same kind of mindset. So I'm still bullish on the Ethereum ecosystem. I'm bearish on the crypto Ponzi bullshit that we saw across the last few cycles. I think the market's getting tired of it, and I hope that like the capital exit out of that that
Go into the good stuff.
more on the real stuff, which takes longer and is harder to build, but is much more sustainable.
Yeah, I wonder if we're going to see a massive market shift, like out of all of these, like out of 90% of tokens, basically, into like the 10% or 5%, and like how that could look.
It's almost like you're seeing a bifurcation
already, right?
So like, on the one hand, like pure hyper gambling insanity, like Fartcoin type stuff, and then like legit serious business. Anything in the middle is kind of getting left behind.
It's like mid-curving it. It's like you're not just a pure meme coin with no value. You're trying to create something, but you also aren't making any money. So it's kind of like, Mike, it's a pleasure to have you, man. Thank you for being here.
See you guys as always.
Enjoy the day. And sign up in the link below. $50 off the first $1,000 cash back.
That's right.
Subsidized lending as well. I am borrowing against my wrapped ETH right now. I am not selling to pay for my subway. Thank you, Mike.
Cool. Thanks, guys.
See you soon.